The stock market got the bounce back it needed today after the Dow dropped nearly 1,200 points just yesterday and started out low again today. It ended up in the green, up 567 points to close at 24,912.77. It was the Dow's biggest point gain since August of 2015. A relief to investors. The market strategists say there will be an extreme sell-off, so you might not wince when you check your 401k in the morning.
Because I winced yesterday. Joining us now to talk about the drop-off and how concerned we should be, John Hicks, Marcus Warren with Hagan Warren. Thank you guys so much for coming. We appreciate it.
This drop yesterday, I've heard so many experts say today, this is what the stock market is really normally like. We just forgot about it because we had this long, tranquil period, which is the most unusual thing.
And that's the absolute truth. I mean, we had the longest bull run in the history of time, all the way up until last Friday. And of course, now we finally get that feeling. What does it feel like to just have a 1 or 2% correction? And today we remembered it's not all bad. Sometimes we just have these moments, but it is a little bit of a warning sign, maybe of things to come. We don't yet know.
So when you say that, now he got me nervous again. So what does that mean exactly?
Well, when you think about it, who would have thought that the trifecta of good news with tax cuts, job growth, and the economy doing well would cause the market to shake a little bit? But that's just what happened, because all that good news causes inflationary fears, and with inflationary fears, they think that the Fed is going to raise interest rates. And when there's other options for investors by going to higher interest rates and moving their money from the market, that tends to make people a little bit nervous, especially on Wall Street.
Right. So what are you telling people about their 401ks, and are interest rates going up? If they are, on what?
Well, realistically, interest rates are going to start moving up. With a good economy, they need to temper some of this growth. Growth is great until you get too far the other direction. And with the trifecta of great information, like Marcus said, that's kind of where we are. They want to do that to stop inflationary fears. If people remember the 70s, we had spiraling inflation. And so this is meant to temper that. So what do people do? You just got to be certain that you have the right game plan. Don't take too much risk. If you had an uncomfortable feeling today in your portfolio, maybe just pare some of that risk back, because there may be, with rising interest rates, other alternatives than just the stock market.
Have about 30 seconds left, though, but don't freak out. I mean, because a lot of people go, what should I do? Should I move money around? You said maybe if you want to make it a little safer, but don't take it out.
Right. The worst thing that you can do is let your emotions take over your investment portfolio. Fear and greed rule the market. Don't let fear set in. Make sure that you have some sort of plan where you don't just jump out and make bad decisions.
All right. You're telling me not to have emotion.
We appreciate it.
Thank you guys so much. Appreciate it.